Bitcoin bounces from a very, very important level. Are we now out of the woods? Can we start rallying back up, or should we still be prepared for some more pain? Thank you for joining me here today for our TA update. I'm still traveling, but here dedicated to give you guys the updates, guys, because as you can see, Bitcoin fell, right? We fell from this level here. We spoke about support coming in at the bottom. And again, just like it's done plenty of times prior, that played out. Nice big daily candlestick yesterday, 4% flowing back into Bitcoin, showing that this bullish continuation pattern has continued to remain true. This is the pattern we've nailed here in this community. We've been speaking about this pattern ever since it started forming in March. We said it's a bullish continuation pattern, and we're holding true to this pattern for now. But there are some key levels which we need to look at. There are some things we need to understand, which if Bitcoin isn't able to reclaim some of these levels, things can start to get painful. Now, it's important to understand and remember that this is sluggishness, right? This sluggishness from the rest of the market transcends across traditional markets. Another slow day for the Dow Jones, S&P, and NASDAQ. Markets are worried about growth. We've spoken about this to death. Markets are worried that we're going to go into a recession, if not we're already in a recession. They're worried Jerome Powell didn't cut rates too soon and not enough. And we're heading 1 week now, guys, just 8 days. Next week, we will be covering it live. Make sure you're subscribed. We're going to get that trusted rate cut, that pivot from the Fed. And I think sometimes, I've been saying this to a lot of people I've been bumping into here recently. They've been asking me, what's my opinion on the markets? What's my opinion? I just like to simplify it. I think sometimes we can look in the charts and make it really complicated. I just simplify it and say, look, for 18 months, 2 years plus, we've been in one of the tightest rate hiking cycles we've seen in a very long time. And now we are 8 days away from seeing a cut. Long run. And I mean, if we're looking at where we're going to go in the next 12 months or 18 months, this is bullish, right? The problem is people get distracted by the micro. In the weeks, in the months, they get distracted and then they miss a whole 12, 18-month bull run. It's like missing the post-COVID boom in crypto, in stocks, in gold, in watches, in everything. Right? That stuff happened and you guys got shaken out, or certain people got shaken out because they were too focused on the nitty gritty. Sometimes just zoom out. The Fed are going to start cutting rates. They're starting at 5 to 5.25 and they've got to keep cutting. They've got to keep loosening monetary policy, loosening monetary policy. Now, the bad thing is that maybe we're in a recession right now. Maybe we're already feeling the effects of a recession. Maybe that's going to materialize in the numbers after the election, etc. But the reality is, let's look past that. Let's look past that and understand that, look, things are going to start looking better. And that's what we need to focus on right now. Things will start to improve and we'll start to see money flows coming back in. Probably doesn't feel like it now, right? Maybe you're looking at it and going, oh, this is frustrating. Been in this pattern for a long time. What are we going to do? It's just a consolidation pattern, guys. And right now, we got this bounce. Good bounce. But what next? Well, let's bring out our EMA ribbon. The EMA ribbon will act like resistance. You can already see in yesterday's candle, where did we get rejected? It wicked into the EMA ribbon and showed weakness. So we have to focus on this level. We've got to reclaim our daily EMA ribbon, which is not going to be easy, right? That daily EMA ribbon needs to close above that 59,000, call it 60,000, right? We need to close above 60,000. Then we can mount an attack back up to this resistance level here. Remember, this red line was our M pattern, which we lost. And then we got rejected here by this zone as well. So got to get above 60. Then we can work and mount an attack towards 64,000. Those are going to be key levels. But for now, don't go chasing this, right? It's ran into its EMA ribbon. Expect the next leg down. We've got to somehow manage to either push straight through our EMA ribbon or grind out a lower high, a higher low, sorry. Just come back here, do something like this, and then eventually get above that EMA ribbon. That's what we need here on Bitcoin. What we don't want to see happen is us just get rejected and push lower and lower, because then we risk falling out from the pattern. And that is not something we can afford to do here on Bitcoin. We need to hold this pattern. If we lose this pattern, guys, it's important to emphasize, if we lose this pattern, things do get a little bit trickier. We need to start looking at other support. I'm going to show you that now because it's important for us to be prepared. When I zoom up to the weekly chart, you'll see very unequivocally here that this pattern drives us, right, from this period here. If we just think about this period here, when we were at that point, we're super extended from the EMA ribbon. Everything is really positive. Bitcoin hitting close to 74,000, new all-time high. And then months of consolidation, months of this action into our EMA ribbon. Now, watch the response. There's two responses. Either the market is weak and panicked and we're going to lose our EMA ribbon and we're going to head down and look for support, right? And we know that the first little chunk of support, which isn't very strong, is at 51,000. And then really you're looking for bigger support down at 45, 46,000 down here. Not fun, right? Us losing our weekly EMA ribbon again. We do not want to be doing that after a Bitcoin halving while the Fed is cutting. That wouldn't be ideal. The ideal situation is we get our perfect bounce, right? And ultimately, that's what we want. We want to be able to take this, we want to hold here, and we want to go boom, big move here after months of consolidation, months of bull run, right? That is ultimately what we want here. And we're set up perfectly for it. You couldn't write this kind of script, right? You couldn't write this script that we were consolidating all the way here, waiting for the Fed rate cut, waiting for a Fed rate cut, waiting for a Fed rate cut. Boom, we get it, and that triggers our next bull run. Now again, very macro, right? Keeping it very simple, that's what you'd expect. But crypto isn't simple. Crypto is liquidations, crypto is lots of leverage, crypto is big wicks and squeezing people out and lots of volatility in the short term. And by no means am I saying there's not going to be volatility. There's going to be a lot of volatility in each weekly candle. But long run, I'm not getting shaken out. I can't get shaken out when this is the structure. And that's what I've been saying for weeks and months now, is I don't care. I'll trade the volatility, which is why it's so important to learn to trade. So I can take advantage of it. I can profit from it. You guys can learn to as well. ijazcrypto.com/TG is where I teach that. But long run, for those who are just holding and investing, which I think everybody should be doing, right? Whether you trade or not, that's up to you. But, for the long-term investing, everybody should be doing that. Everybody should be investing. Then why would you want to be out of the market at this point? I mean, somebody give me a rational reason for why you'd want to be out of the market at this point. Now, there's one caveat to that. Try not to be the investor that cannot DCA. It's important that whenever you deposit a bit into crypto or any investment, this applies for any investment, you buy some, you've DCA'd, go and get more cash, right? Go work hard, go work on stuff to try to get more cash. The problem is with crypto is everybody is trying to flip their way to millionaire status. Right? They're doing not even trading, because if they were trading, they'd have a strategy and they'd be diligent like we teach. They'd have stop losses and take profits, and they're chasing 6% here, 6%, 7%, and they're very methodical at trading. They're not. They're almost like trying to flip their way, moving their one bag across their last $1,000, moving it from Bitcoin to Ethereum to Solana to Cardano, and just hoping that something pops off. Don't be that person. If you're DCA a bit. Try to get some excess income, wherever you can save up, even if it's a little bit, get ready to DCA more. Because the reality is, if this dips down to 45,000, before then having this big move to the moon and having a crazy bull market, you miss the opportunity at buying at 45,000 when this price could be going to 100, 150, 200,000. And that's the reality of it. You've got to be in a position where you're ready for the market to moon, you've got enough in the market that you're excited, but you're also trying your best to kind of get a bit more. There's this weird dichotomy where you kind of need to feel like you have enough, but you still never feel like you have enough. And that's happened to me every single bull market. I never feel like I've had enough in the market. I always wish I bought some more Ethereum, bought some more Bitcoin. So take some of my lessons from my experience and just try your best that when you see bad days or bad weeks, you're trying to net DCA, not panic. And even if it's a tiny amount, the fact that you're taking your wallet out and when everybody else is fearful and panicking and the fear and greed index is sitting all the way here in the red, at least you can pull out your wallet and say, you know what? I nibbled a bit more. I bought some more. And that way, net over time, I'm showing that I'm not getting panicked out. I'm taking advantage of these moments because it's easy to say it, right? Buy when others are fearful. But to actually practice what you preach, to actually take out your wallet on a painful day when markets are pulling back, like we had a couple of days ago, right? If you're looking at these candles here when we're pulling back, and to actually decide to go and buy, that's not easy. Let me just show you some examples here. So would you have actually bought on these big wicking candles? I mean, just a few days ago, if we take this one on Friday the 6th of September, just 4 days ago, losing the support, big wicking candle here, 4% down day. Did you manage to nibble? This big candlestick here was a horrible candle, down 7%. Did you manage to nibble? This is what's going to prove if you're able to control your psychology, because the reality is if you have conviction in the play and you want to invest in it long term, then these little small wicking candles of leverage flying around in the system shouldn't affect your long-term thesis. Like if you genuinely believe fiat currency is on the decline, Bitcoin is the solution, your portfolio of altcoins is the solution, why are you allowing small little worries about the earnings call and the Japanese yen trade or any of these smaller things in the market, these little panic and fear moments? Why are you letting it change your multi-year conviction in an asset class? That's something you need to reflect on. So there you have it, guys. Hope you found this video useful. Important moment for Bitcoin. Got to get above the CMA ribbon. I want to see us get above 60, close the day above 60 in the next day or two, and start working another tech towards 64. Once we've got through 64, guys, we need to spend more time up here. I want to see us spending more time up here so we got a higher probability of breaking to the upside. I'd feel a lot more confident once we get above 64. If we can get above 64, things are looking really, really good. But that being said, like I said weeks ago, I said that we would get more pain leading up to the FOMC meeting, which sounds counterintuitive, right? People are like, oh yeah, but you're expecting a cut. No, I expect buy the rumor, sell the news. Don't be surprised to see people try to shake you out before and leading up to this FOMC meeting next week. I expect a really volatile 7-8 days here on Bitcoin. And even after Jerome Powell delivers whatever he delivers next week, it's still going to be volatile. And we've got to get ready for that to cool down before then what I expect to be 6, 7, 8 months of exciting, powerful movements to the upside. Hope you guys enjoyed this video. If you like this type of content, please don't forget to hit up the likes. Do not forget to subscribe. And I'll see you in the next one.